do you trade the SPX? That's a question that I get a lot. So I'm going to walk you through step by step how I trade the SPX, if I do, and what are our choices when we're talking about the S&P. And that really is the bigger conversation. What are all the different ways we can trade S&P? All right, because SPX is just one of them. There's the ES futures, there's the MES micro, there's the SPY ETF, and of course, yes, there's the very popular SPX. All of these can be traded within the context of the trend that is visible on the S&P futures. This is nearly a 23-hour-a-day view of what's going on with the S&P. So if I have clarity at the top of the food chain, if you will, every one of these is then a viable alternative or additional alternative, right? I'm also going to go over the open swings that we have going on right now in the Sector Secrets Mastery to give you an idea of the kind of unusual places that opportunities are cropping up. First of all, at ES, notice there's a few things we have here. On the 1 hour time frame, we have been generally neutral or bullish, and most of the grab candles, GRAB, are green. Green grab candles indicate we should be bullish. The green multi-trend indicates we should also be bullish. That means that if we get pullbacks into this area here, the 34 EMA wave, that is a buy the dip. It's a mean reversion. So this means if ES is valid for buy the dip, so is SPX. You might say, well, Rog, how do we do that? Pull up SPX, and SPX doesn't have to be in the wave for this to be valid. If the ES is in the wave, great. That's enough for the SPX. Okay? Now, another thing we're going to look at is the daily price movement range. And a lot of folks have been saying, okay, Rog, I know you do a lot of work with volatility. Where is the next volatility zone waiting for the SPX? Really interesting. Right now, it's down in this area here between basically 47.20 and about 47. I'll give you precisely where it's sitting. 47.23 to 47, call it 09, right? So a pullback into that gray zone, which updates every single day to reflect the volatility of the current session. In other words, think about it. We know that all Mondays tend to operate kind of similarly. Tuesdays have their own characteristic. Wednesday, Thursday, Friday, right? Why can't we look at volatility from the perspective of a typical Monday, a typical Tuesday, a typical Wednesday? That's exactly what the DPMRs do, and that's exactly what I'm going to be looking at there. So that's how I want to trade the S&P. What about SPY? Right? SPY is actually a really great way for smaller accounts or traders new to the S&P to get involved with a little less risk. Now, by that, I mean less risk in terms of cost and less risk in terms of volatility. The volatility with leverage of the ES futures is pretty significant at $50 a point. SPX can be a little spendy. SPY is a really easy place to start your journey with the S&P, and then you can go whichever way you want to go. Go to the futures, go to the SPX. Here you'll see gorgeous daily price movement range, and you bet that's exactly what I want to do again. Let price get back into that daily price movement range. We have CPI, inflation gauge. On Thursday, we have the PPI on Friday. So there is data that could get us down there. And we can get opportunistic with some long calls or short puts. So for those of you thinking, Rog, I'm not a debit trader. I don't want to necessarily look at a debit, long calls. Can I look at credit? Sure. At the same time that I would be considering long calls, it's precisely the same zone that I'd be open to short put selling premium. All right. So what are the 4 symbols we've been playing this week? Starting with our first alert. And by the way, is this futures? No. But right now, there's not necessarily a ton of clarity in the actual indices, the broader averages. But there's been really good clarity in pieces of the average. First off is JP Morgan. Nice swing trade that we took in this area as price sunk into the daily price movement range. Okay, so that was really just a quick short-term swing. It lasted about a day and a half. McDonald's was the next one. McDonald's is interesting because of the exposure McDonald's has both as something that is part of the consumer discretionary, but non-tech. So take a look at the wave bounce, right? This is very similar to the 1 hour chart where I was showing where a mean reversion. This is a mean reversion, gang. 34 EMA wave. So we're looking for a rally out of this area. All right. So those are the two first swings of the week on Monday. Today we've gone a little bit different. We have some interesting movement in basic materials. We have some interesting movement in unusual places compared to where we've been focused on as of last year, meaning Magnificent Seven and tech. We see industrials moving. We see the basic materials moving. We even see utilities moving, right? So DOW, not the Dow futures, but DOW. We have a nice setup here. We've got our eye, by the way, on Freeport-McMoRan. That's another one that's in basic materials. All right, so keep an eye on that one. And the other trade that we took today, hey, look, nothing has been benefiting from sector rotation in a more magnificent way, talk about magnificent, than healthcare. Healthcare is definitely going from laggard to sector rotation superstar. It's defying gravity even when the broader averages are struggling. The XLV ETF has been moving higher, and Johnson & Johnson with it. So that's the fourth symbol from a swing overnight perspective that we are looking at. And that's what's on the radar right now. A little unusual, gang. Don't be afraid to look at where the movement is right now, right? Don't be afraid to look at, okay, this is what we did last year, semis, tech, right? The last 12 months, but what about the last few days? What about 2024? Sector rotation could be seen here really clearly. There's XLV at the top of the list, right? That's what's been hot this year. Utilities, staples. Those are two defensive places, gang, that are not heavily weighted within the broader averages. So we have to think outside the index box. We have to think outside S&P, NAS, Dow, Russell. Even though there are some interesting setups for the S&P and NAS, let's remember that some of the movement is in places that we may not necessarily have been talking about last year. And that's the interesting thing from the December window dressing to the January effect, which could really just be called sector rotation and or window undressing. All right, gang, as always, if you have any questions, feel free to type them below. Thank you as always for your time. Thanks for the thumbs up. I appreciate the time. And remember, let's think out of the box a little bit, because January is off to an interesting start that's distinctly different than what we saw winding down 2023.